Welcome to Value Vest Daily, where we analyze the best value and momentum investment opportunities.
All right, let's just jump right in. We're looking at a company today that might just be the secret sauce, the hidden engine behind the next generation of smart cars. So here's the big question we're asking. Could this kind of small $841 million company, INDI Semiconductor, really be the key to the entire future of how we drive? It's a bold question, so let's see if we can answer it. So, what exactly is INDI Semiconductor, or INDI? That's their ticker. What do they do? Well, you can think of them as the company that's building the specialized brains inside your car. Seriously, they're designing these super integrated chips that power, well, everything from advanced driver assistance systems, ADAS, the tech that keeps you in your lane or warns you about a car in your blind spot, all the way to the core components in electric vehicles. And here's the thing, they're already trusted by the heavy hitters. We're talking BMW, Ford, Hyundai, the list goes on.
Okay, so every great company needs what we call a moat, right? That special something that protects them from the competition. For INDI, their moat is, well, it's like a Swiss Army knife for cars. It's a great analogy, actually. They have this amazing ability to just pack a ton of different functions into one single, powerful little chip. And that, my friends, gives them a massive edge. Let's dig into how they pull it off.
The secret sauce here is a piece of tech called a system on chip, or SoC. And it's exactly what it sounds like. You take all the major components of a computer, we're talking the processor, the memory, the power controls, the whole shebang, and you literally integrate them all onto one single chip. And when you think about it, modern cars are just computers on wheels. So this kind of super efficient integration, it's not just nice to have, it is absolutely crucial. And this slide, wow, it really lays out the difference perfectly. On one side, you've got INDI's approach, one powerful, elegant chip that does it all. We're talking less complexity, lower cost for the car maker, and get this, up to 50% less power draw. That's huge for EVs. Now on the other side, well, that's the old way. Multiple bulky chips, all separate, all less efficient. That just means higher costs, way more complexity, and a bigger drain on the battery. It's really no contest. And listen, this isn't just some clever design idea they came up with. No. This is a fortress of intellectual property. We're talking over 1,000 patents protecting their tech. Just think about that. That means a competitor can't just waltz in and copy what they're doing. This deep IP portfolio, that's a huge part of their Swiss Army knife moat. And the moat just keeps getting bigger. First up, they have this software in silicon model. Now, this is really smart. It means they don't just sell you the chip and walk away. They also license the software that runs on the chip. That creates a steady, high-margin, recurring revenue stream. Love to see that. Second, they're fabless. They do the genius design work in-house, but they partner with giants like TSMC to actually make the chips. That keeps their costs way down. And finally, the big one, a $7.1 billion secured design win backlog. That's basically guaranteed future sales already locked in.
Okay. The technology is obviously super impressive. The moat is strong. But you and I know that's only half the story. The real question is, what do the numbers look like? Does the financial picture back up all this potential? Let's dive in and unpack the financials. Well, right off the bat, wow. The revenue growth here is, and I'm not exaggerating, absolutely explosive. We are talking triple-digit year-over-year growth. Look at this, plus 129% in 2022. And then they did it again with another 101% in 2023. In the semiconductor industry, which is notoriously tough, that kind of growth isn't just good. It's a massive signal that the market is loving what they're selling. But, and this is a really important but, this is where the story gets a lot more nuanced. That amazing growth comes at a cost, at least for now. The company isn't profitable yet. Let's just walk through these numbers. That forward PE of 128, that's sky high. It tells you the market is betting big on their future. The ROE is negative because, well, they're not profitable. They've got a decent amount of debt, and that negative free cash flow means they're burning cash to fuel that growth. So what does this all mean? It means this is a classic high-growth, high-risk play. The potential is huge, but so are the risks. So the billion-dollar question is, how do they become profitable? Do they have a plan? The answer is yes. Management has a roadmap, and they're targeting break-even by 2027. On top of that, the projection is for about a 25% compound annual growth rate for earnings over the next 5 years. And what's the key to making this happen? It all comes back to those awesome high-margin software licenses. That's the real engine for future profitability. All right, so let's dream a little.
If they execute on this plan, if they hit their targets and really capture a big piece of this automotive tech market, what's the upside? Well, in a bullish scenario, we could be looking at a market cap of $4 to $5 billion by 2030. To put that in perspective, that's a potential 5 to 6 times your money from where the stock is today. Now, that's substantial.
Okay, we've covered the business, the tech, the financials. Now let's switch gears and look at the technicals. What is the stock chart itself telling us? And maybe even more important, who is buying the stock? What is the big money up to?
And this is a really big deal. Look at this. Over 2/3 of the entire company is owned by large financial institutions. We're talking about the big pension funds, the huge investment banks, what people call the smart money. When you see a number that high, it's a huge vote of confidence. It tells you that professional analysts have kicked the tires, done the deep research, and they believe in the long-term story here.
And we're not talking about small, obscure funds either. Look at the key holders. You've got the giants, Vanguard, BlackRock, Frontier Capital. These are some of the biggest players in the game. And just look at the money flow. Over the last year, $250 million of institutional cash has poured into this stock. And just last quarter, nearly 100 different funds added to their positions. The takeaway here is simple. Big money is watching, and they're buying.
So, what about the short-term picture, like right now? Well, from a purely technical standpoint, the signal is basically hold, or maybe even buy the dips. The stock is hanging out below some key trend lines, and an indicator we like to watch, the RSI, is sitting right around 48. That's pretty much neutral territory. It's not overbought, it's not oversold. It feels like the stock is kind of catching its breath right now.
All right, let's bring it all home. We've got a great story. Explosive growth, some clear risks, but also some serious institutional backing. So the million-dollar question, where could INDI's stock price actually be heading from here? Let's take a look at what the Wall Street analysts think. And it turns out the analysts are pretty bullish. Let's look at this price target ladder. The average target for just 1 year from now is $6.40. That's a potential 54% upside from here. Not too shabby. Go out 3 years, and that jumps to $7.50 and 80% gain. But check this out. The 5-year target is a whopping $12. That's a potential gain of almost 190%. Clearly, the consensus on the street is very optimistic for the long haul.
So here's the final breakdown, the bull case versus the bear case. On the bull side, the argument is compelling. You've got a pure play on the super high-growth ADAS market. You've got that strong Swiss Army knife moat we talked about, and you've got that massive $7.1 billion backlog. That's a powerful combination. But you absolutely have to look at the other side. The risks are real. They're still burning cash, they're tied to the auto industry, which can be very up and down, and the stock itself is super volatile. This one is not for the faint of heart.
And as always, it is absolutely essential to remember this is all for informational purposes. This is not financial advice. Every single investment carries risk, so please do your own homework before you make any decisions with your money.
So that really brings us back to where we started. It's the ultimate question, isn't it? Will INDI Semiconductor's really unique technology be the key that unlocks those massive potential returns? Or are the market risks, the cash burn, the competition, the economy, going to keep this potential high flyer stuck on the ground? It's a fascinating story and one we'll definitely be watching. If you enjoyed this breakdown, please make sure to subscribe, like, and share ValueVest Daily so you can learn about unbiased opportunities before you put your money to work. And hey, one more thing. If there's a specific ticker symbol you want us to do a deep dive on next, please drop it in the comments below. We read all of them.